Okay, so let's check in very quickly with Simon Pusey, my colleague at our London studios on the glitch early today at the London Stock Exchange. What actually happened and how is the system for today's trading getting underway? Simon, good morning. Welcome to the show.
Morning, Bosun.
Thank you. Bring us up to speed here.
Yeah, so trading in the biggest shares listed on the London Stock Exchange was delayed, as you said, for more than an hour in the longest outage in more than 8 years. The reason? The London Stock Exchange said it was investigating a potential trading services issue. Shares in the FTSE 100 and FTSE 250 indices were both affected, although smaller stocks traded as normal at 8 a.m. Trading resumed at 9:40 this morning, the longest closure since February 2011 when it was shut for more than 4 hours. The FTSE 100, which had fallen to a 6-month low yesterday, was 56 points higher when the market eventually reopened. Let's look back also over the last few days. It's been a subdued week for the FTSE 100. Fears regarding a no-deal Brexit, Hong Kong disruption, China hitting back at the US with more tariffs and predictions that the global economy is about to go back into recession all meant London markets have generally been down this week. Top of the losers was the Royal Bank of Scotland, which dropped 8.8% to 181 pence after analysts lowered their forecasts for its shares. Rolls-Royce also having a bad week. Their shares are down 3% due to fears surrounding its engine. Interesting to note, Burson, that the FTSE 100 is now just about 1% above its close on the 30th of December 1999. So that's 1.1% growth in nearly 20 years. And people are questioning why the top 100 firms are now worth pretty much what they were then.
Very interesting. For about a minute or less, what's your outlook on next week? I think we can all lay back today and say, well, what a week it had been. So what's the outlook next week?
Yeah, next week all eyes will be on British Steel after news today that Turkey's military pension fund has reached a tentative deal to buy it out of insolvency. The Turkish Armed Forces Assistance Fund, known as OYAK, says it plans to take over British Steel, which employs 5,000 people by the end of the year. Close to 4,000 people are at risk of redundancy after the firm was put into compulsory liquidation in May, and there are another 20,000 jobs in the supply chain. So next week will be a big one for British Steel and whether this deal will in fact go through. Lots of people also watching news from Heathrow Airport next week. Strike action scheduled for the 23rd and the 24th of August has been postponed to allow union members time to consider a revised pay offer. But the Unite unions still warn of a summer travel chaos with walkouts scheduled on a number of days during the peak season. So next week will be interesting to see if workers do accept the pay offer or go ahead with strikes, which will target peak days for travelling from Britain's busiest airport.
You need to keep an eye on all of that for us, Simon. Thank you so much. Enjoy the rest of the day. And, of course, you're sharing some of the market updates in the afternoon with Chimeze Obiwago on our Business Incorporated 1:30 local time. Thank you so much, Simon, for coming through on Business Morning today.
Thank you, Bosun.
Great. Let's check in very quickly with the Nigerian Stock Exchange. The market is looking a little bit green this morning as GT Bank announced 99 billion naira as its net profit for the first 6 months of this year. Profit before tax came in about 115.78 billion naira. The company is reporting other income at the doorsteps of 30 billion naira, saying it's paying an interim cash dividend of 30 kobo per share on September the 11th. Earnings per share, basic earnings EPS coming through 3 naira 50 between January and June this year, much better than 3 naira 38 kobo. The company reported in the first 6 months of 2018. Edijong Inwang is my colleague, business correspondent, live to us at the Nigerian Stock Exchange trading floor. Eddie, let's spend about a minute or so together on this very quickly. Good morning.
Good morning, Bosun. Well, the market is up 0.13% as we speak, and only the banking index is up at this time. All other sectors are unchanged, and that sector is currently up by 0.5%. And we've seen gains from FCMB, we've seen gains from Fidelity Bank, and of course, we've seen gains from GT Bank. So we feel investors are reacting, to the interim dividend, which will be paid on September the 11th. Now, that stock is currently up by almost 1% at this time, trading at 26 naira. We've seen about 168,000 shares worth 4 million naira traded in 20 deals at this time. So we'll keep an eye out to see how investors continue to react to that. But just before you go, Bosin, speaking about financials, Union Decontour PLC says that it has not yet, filed its unaudited financials for the period ended June 30, 2018. Now, this is because the company is trying to, clarify its position on the external auditor's qualification on the company's audited financial statements for the period ended December 31st. Now, and this is with the Financial Regulatory Commission of Nigeria, so once they have been given approval or clearance from the council, it will file its unaudited financial statements for the period ended June 30.
Yes, Young. The man whose image I'm seeing at the far background over there, behind you, in blue, native head cap is the Equities State Governor, Dr. Kaudi Fayemi, who's closing the market for today. I'm sure this is one big visitor you folks, you and yourself and Temple, will be meeting today as he speaks at the trading floor. That's him there. I can see that. Can you see that?
Oh, yeah, I can. Sure, he's right behind me.
He's there. He's the one smiling across. He's smiling on the trading floor. Thank you very much. We'll have him live later today. Thank you so much. Bring us all the news as we have it here on Channels Television.
Thank you, both.
Nigeria's news leader. So it's been a very interesting week as well. If we try to finish off the debt market, where yesterday the Central Bank of Nigeria conducted the first open market operations treasury auction in recent weeks. So the tightening, as some folks say on social media, started as the central bank tried to rein in what the government pays on treasury bills. So we had a PMA on Wednesday. Then on Thursday, we had an open market operations. Even as the government repaid mature treasury bills, the central bank threw in about 150 billion open market operations money, trying to manage the liquidity and prevent excess naira in the system and causing a bit of a problem. Okay, so let's check in with FMDQ Exchange Place, where Bosun Obembe is standing by from Access Bank to wrap this up for us. Bosun, it's been an interesting week. So far, the financial regulator, the central bank, is holding all the force, as it were, on the market.
Good morning, President. So yesterday, that CBN floated more, so which is in line with market expectations. So there was 150 billion on offer, 20, 30, and 100 billion on the short to long term. However, the demand was a bit weak because there was a signal in the market that, okay, the stop rate would be 12.5, but because of the weak demand, the stop rate on the long end closed at 12.88. So a total of 8 billion was sold yesterday. So this was as a result of the position that we witnessed in the investor and exporters window as a result of the sell-off by the offshore counterparties. So by next week, we expect CBN to conduct another almost action, given that for the remaining parts of this month, we have about 700 billion maturity. So the yield is about 14.8, so is a bit attractive. So we think that one should a bit stem the sell-off that we are witnessing currently from the offshore, which is something we are seeing from the equity market as well.
Okay, a quick one. Speak to us about the INE window exchange rates market.
Okay, so the INE window, what we've seen this week is we've seen depreciation, which is due to the sell-off by the offshore counterparties. So they are trying to exit the market because the yield is not attractive. So that's the reason why you see CBN trying to conduct some more auction. We've not been seeing inflows from the offshore because they are not coming in to invest more. So they are just taking profit and going out. But CBN has been able to meet the demand. Yesterday, the turnover increased by over $500 million, which is the highest we've seen so far this month. So CBN has been able to sell to meet the offshore demand. And today, we expect retail SMIS option to actually hold as well, where CBN will inject fund into the system next week. So the INE window is being a bit tight, but CBN has been able to intervene to to keep the market liquid.
Okay, Bosun Obembe, thank you so much. We appreciate that for our FX dealer at Access Bank PLC. Enjoy the rest of your day and the weekend.
Thank you.
And that's bringing the show to a close and the Business and Market Week. It's going to be very interesting next week. Don't miss the presidential retreat for the incoming ministers. Mr. President says he will speak, and we expect him to speak more on his statement regarding the FX ban on food imports. He says he's going to hand over to each minister their performance papers. Let's keep that in mind as we lay back, enjoy the weekend, and we'll return to you on Monday. Have a great weekend, everyone, and goodbye from Lagos.